Happy Monday, traders. Well, look, last week was a big week in market, lots of big moves, but the biggest moves were saved for Friday, post non-farm payroll. So with the payrolls numbers, the market was expecting plus 110,000 new jobs added, and the unemployment rate to go from 4.1 to 4.2%. So the numbers actually came out weaker than expected. So they came out plus only 70,000. And the unemployment rate at 4.2%. But that's not really what got the market moving. What got the market moving and shocked was that we had some revisions to the prior 2 months of payrolls. And those revisions revised down the headline employment numbers by 250,000. So basically saying that no jobs were pretty much added over the last couple of months. And it is actually a record 2-month revision down. So it was those revisions that absolutely shocked the market. Donald Trump did come out straight after numbers. He basically said that the numbers are being manipulated, that the head of the Bureau of Labor Statistics, the BLS, was a Biden appointee. And she is making the numbers look much worse than they are to basically make Trump look bad. And Trump basically said that the economy was actually booming, and so there's no way the numbers could be that bad. And so he fired the head of the BLS immediately after the data. He also called Powell a moron, and that he should be cutting rates immediately. So yes, we've got a very, very big reaction from Trump post the numbers. In any case, look, the market did trade on the back of this huge revision lower. So the biggest market reaction, the most meaningful, is we have a look at the bond market. So if we have a look at US 2-year yields, they were trading and touched just around 4% just before the number. They were actually having a good week higher. And they got smashed lower, 30 basis points to close down around about 3.7%. It's a huge move. US 10-year yields as well, they were trading around 4.4+% before the numbers, and they came off a good 20 basis points down towards around about 4.2%, so big moves there as well. And if we have a look at the Fed Fund futures, what it's pricing for the next Fed meeting, which is in September, there's no meeting in August. Fed Fund futures now are pricing in an 80% probability that the Fed will cut in September now. Previously that was actually below 50%, so big jump up there. And we actually do have some in the market that are starting to talk about the Fed maybe even cutting by 50 basis points in September on the back of these really, really weak labour market numbers, that the economy potentially is rolling over. The chief economist at Moody's actually thinks that we are headed now towards a recession. So there you go, how things can change very quickly on the back of one number. Okay, so if we have a look at how the market's traded, the currency market, US dollar, it follows bond yields. So your bond yields higher, US dollar stronger. That was what was happening most of last week. But that huge reversal in bond yields and the US dollar got absolutely obliterated. Dollar yen, which was trading up towards almost 151, lost almost 4 big figures to be trading back down towards 147. And technically it produced a huge bearish key reversal day. And if you have a look at euro, which came off a good almost 4 big figures last week before the number, that rallied 2 big figures after the number, back up towards 116. So huge moves in the currency space in one session, that US session. Look further out, I'd suggest to keep an eye on what happens with US yields. If they continue lower, then the market will continue to sell US dollars. If we get a bit of a stabilisation in those yields, then some of these moves may be overextended. But anyway, if you're trading the currency market, you are trading these bond yields, so look at those closely. If we have a look at what's happened with gold, gold absolutely loved the number. The low on Friday before the number was around about 32.80. and that was one-way traffic up $80 in one session, all the way back up to 33.60. So it loved lower yields and it loved the lower US dollar, but also, obviously, if there's recession talks, loves that. But there were some geopolitical moves as well, in that Trump is getting tough on Russia, and he actually deployed 2 nuclear submarines strategically, as a warning to Russia. So obviously, when there's geopolitical concerns, gold loves that. So yes, the market is back, certainly buying gold, and no doubt it's going to be bought on any sort of retracements, dips there. Equity markets, look, July was an outstanding positive month for US equities. On Friday, on the back of those numbers, the equities did trade lower, and we saw Nasdaq down 2%, S&P about 1.6%. But also the thing that was weighing on equity markets is the fact that obviously tariffs went alive as well on the 1st of August. So there was quite a number of factors working in the markets on Friday. Look, this week is pretty low on event risk. It's pretty low on top tier economic data. So no doubt we're going to start the week, trading the fallout, continue to trade the fallout from, what happened on Friday, because obviously it's a big deal. And the big question is how real those numbers are, is whether or not Trump is right and that maybe they've been manipulated or not. So there is question now about the integrity of this economic data. But the big question, obviously, is the market's going to be trying to answer now is exactly where we're at the economy, is whether or not we are going towards recession. And then obviously now this September meeting is going to be very interesting for the Fed. Looks like it's obviously a live meeting, and what that will implications that it's going to have for risk assets. Anyway, good luck with your trades to start the week, and we'll catch back in with you soon.